Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over options data. So this is week 3 of highly regarded option theses. And this here is the table for the week. I did make some updates, so I wanted to go over those with you guys before I dive into the data, dive into the charts. I'm just going to ask Ed to step aside so we can see the full table there. So these are the stocks that I have been going over the past couple weeks. I did add some. I will be removing some. And so I just kind of wanted to go over that. So what I have in the table here, all of these different tickers, they are graded and or not. Those do represent timestamps that I will add to the video. What we have here in column B is the strike price. All of them right now are calls, and that's really just based on the thesis that, we're probably going to be seeing a Santa Claus rally, and so I think that all of these could be going up. Also based on technical levels and, just going over the charts, which I will be going over, breaking down with you guys. I did color code the expiration dates, so pretty much anything that's in black is coming up or, in the past, as I do record this on Saturday, November 16th. The 15th is in the past. And so, the ones that are in black are basically, a little bit, got to be cautious with them. Red, next level down, then orange. Green, I'm feeling pretty good about, but really ideally, the blue ones, June 20th of 2025. Those are the expiration dates that I want to be establishing positions in, just because it gives me, 8 months to kind of get in, get out, and or adjust if things don't go according to plan. And but the reason why I've picked some that have earlier expiration dates is either because they don't have a June 2025 expiration date in the options table currently, or because I couldn't find the data in Unusual Whales, because I do have limited access right now because I am not currently a subscriber, but I will go over that, as I do have all this stuff listed up here. So the first thing I should mention before going over anything in the table is that this is effectively just a trading journal for myself, documenting my learning process. I wanted to do that for you guys. Also, it holds me accountable to follow up going over this stuff in detail for my own purposes. And, just kind of getting used to the data and thinking about, if something's going down, do I want to be adding or should I cut losses? Stuff like that. So that is, what this is. For educational purposes only, for fun. I have fun doing this. If you don't have fun doing it or watching this, then, go check out some of my other videos or a different channel. This is fun for me. And over the past week, really over the past couple of months, I've gotten some comments, very few, but just very negative. And I'm very tired from work, very tired from putting this data together for myself, but then also putting it together to share with you guys. It's really draining. And so whenever there's a comment that's just really negative, it really takes a toll on me. But, this is something that I want to be doing for myself, and so I'll be sharing it. I hope it's helpful for you guys. But of course, this is not financial advice. So, I might lose money on some of these. I might lose money on a lot of them. Some of the trades, if not all of them or most of them, will be bad. And most, if not all of the contracts, will go to zero. So be very cautious of that. If you take any of this information, it is for educational purposes. It is for fun. And of course, as the market changes, plans may change. So if I say that I might be adding at a level or trimming at a level, exiting at a level by the time I make the next video, I may not have done that because things in the market may have changed. Maybe we bump into resistance that I didn't expect. So I take profits at a lower level than what's outlined in my thesis. And that is always changing every single day, especially whether or not I'm at work or not. Something did happen that I could have taken profits at a lower level. I would have noticed there was some resistance, but I didn't. I was at work. And I kind of regret that, but there is some bullish data that I was just looking at yesterday. So I'm really excited about that one. Looking forward to going over it with you guys. And then I do want to note I am using Unusual Whales data, but just really like for financial reasons, I stopped paying for the monthly subscription. and also because I felt like I was a little overwhelmed with the data. And so I kind of wanted to just filter, what data they do provide publicly, get into that, make my own charts just so I can kind of understand it a little bit better. I'm a visual, hands-on, interactive learner, and so just seeing all of the data on unusual whales is pretty overwhelming for me. And so this is really helpful for me, and not being a subscriber is helpful for me, but it has also highlighted really, the benefits that one gets from unusual whales, that, pretty much all of these expiration dates would be June 20th, but I just couldn't find the data publicly available on unusual whales with, not paying for a subscription. So once once the holiday sale comes around, I'm probably just going to get the annual subscription, because I've used it for a few months and it was beneficial, but I didn't really figure out how it was beneficial. Everybody trades differently. It's all based on psychology, emotions, money, how we manage all of that stuff. And everybody's different. And so, this is kind of the way that works for me and my psychology, my emotions, or at least I think I will find that it works for me. And so hopefully you guys can learn from it. And once that holiday sale comes around, I'm just going to, go all in for a year because I think that it will add value for these videos, add value for my trading, and, just make things more fun. And that's what this channel is all about. And so I will get into this key in a second, but I really just wanted to get into this thesis here that, all of this is based on really the trading journal. And so my thesis has been for a long time that with options, it's pretty easy to make a 20% gain. But something that I've noticed really like around GameStop and others is that I could make a 20% gain, but then maybe it goes up to 60% or 100%, basically a 2x. And so I felt like I was, repeatedly taking profits at 20%, but I could have held for longer. And so I kind of revised that thesis to be, some of them are 20%, but some are 100. I could have taken profits at 80% on one of my trades today, over the past week, but I had a limit order placed at 100% and 200%, so a 2x and a 3x. But it went up to just below 90%. And so I realized, well, maybe I'm being a little bit greedy with 100%. So maybe I kind of want to revise that to 80%. And then that also kind of balances with this 20% here. If I do have two contracts, I trim at 20%. And then I close my position at 80%, that total is 100% on one contract. So, I feel like maybe that's a little bit better of a strategy, especially if I'm at work. I can't be looking at the charts, every day. So maybe 80% is a better strategy. So I did adjust some of my limits to 20% to 80%. Some are still 100%, and some are still, X times 100%, just letting runners go. But, that hasn't happened yet. I haven't gotten up to that level. But yeah, and then also I do have the 0% here for break even, or maybe even taking a little bit of a loss if some of these do go south. That is something that I need to be considering, because some of these are going to be bad trades. Some of them will be bad. I think that some of them we will discover for following this week. I think some of them are going to be bad, and I need to kind of have a strategy for that. And so I'll kind of break that down for you guys, break that down for myself in this video. And then also part of the thesis is to end the week with 20 or fewer positions. And yeah, that is going to be not only in contracts, but also in shares. Some of these positions I do have shares of. That would be AMC, let's see, and Neo, Plug, Rivian, and that's, and UVIX as well, I guess. And so that the share positions and the options, those add up to the 20 positions. I did almost end this week with 21 positions, but I did have a limit sell hit, so that was nice. Now I just have 20, so it's great to start the week. And, talking about my positions, I did add this key here so you guys can kind of see what, is going on. So made money is the $, the money bag. Lost money is the crying cat. I did lose some money on the Unity software play here. But that was effectively break even, but I did lose a little bit. So I do have that emoji there because I will have some losses in this documentation, which I think is going to be kind of the interesting part of that. How do I handle taking losses, especially when, I'm kind of like documenting that publicly? It does make me feel a little uncomfortable, but I think for educational purposes, this is useful for me to learn for my own personal educational purposes. Hopefully it's useful for you guys. And part of that is going to be taking some L's. And then holding the ones that I hold, you can see here with the, hands emojis. Ones that I'm just watching, that I don't have positions in, you can just see the eyes there. There are a few of those. Ones that I'm going to stop tracking, that is going to be with the goodbye hand emoji. And some of those might be replaced. And, I will add them next week. And so the ones that I do add that I will begin tracking are marked by the crayon. And so one of those is the Moderna call that, I will be tracking over the next few weeks or so, maybe months. And I guess just a few things to note. Ones that I am saying goodbye to, I do, for the most part, plan on continuing to follow them, but just with a different contract, which I don't have up here. I'll think about that next week, or actually probably after I release this video, I'll figure out what the next contracts are. I just can't, I don't want this to be going all the way to the bottom because it's just overwhelming for me to keep track of all this stuff. But so what I'm saying goodbye to is this GameStop call, and that's really just because it did expire. So I'll look up a different GameStop one. I never held this one. GameStop's usually like a little too pricey for me, but the analysis that I did on this one, as far as tracking the data goes, I think that it did give me some confidence in some of the notifications that I get on X, social media, whatnot. That was a profitable alert, some analysis that I saw somebody else posting about. So, I will be following up with a different contract next week. Lucid, I did take profits a couple times over the past week. One was really just kind of a mistake and, then took profits. But it's a little too speculative for me, especially because I do have Neo and Rivian on here. Don't want to be spread too thin with, the EV plays. And, so I'm saying goodbye to that one. It's just a little too speculative because it's putting in new lows. So I'm going to be cutting that one off the list. And then this one, SSYS, I did take some profits on this. I think in last week's video I went over that. I could have made a lot more money. I could have 2x'd that one, but there wasn't enough data. And so, I just kind of wanted to watch that. And, moving forward, though, I will be saying goodbye to this. And, with that being said, I should probably put, the eye emoji here because I have been watching this the past week, even though I was not holding it. And then this other one here, Unity software, I sold that. I'm cutting it because I think it's going to zero. I do have this one. I'm a little bit concerned about this one going to zero. So this is potentially my loser. And then UVIX, I might add a different call option on there. This is just getting too close for comfort for me. So, I will be adjusting that. But yeah, I didn't expect to spend so much time on this intro, but that's really just the breakdown of this update. I probably won't be making many changes to it in the future other than adding stuff. So I will now start going over AMC. But first I'm going to put my earbuds in and so I can listen to some music. So I'm not doing this, all by myself in the quiet. I at least have some music, but before I get onto AMC, I'm just going to start that music, and now we can get along with it. Okay, so the first ones on the list are AMC, and so I am going to go over the first one, which is the AMC $8 call that expires January 17th. So for me personally, getting a little too close for comfort, I am no longer holding a position. I could have made more money on it, which all of these, whenever I sell, I very rarely sell the top. So I could have made more money on it. And so on November 11th, I sold at 23 cents and 30 cents, taking a 20% and 60% profit. Did not buy back in. As you can see, sold at 23, 30. It did go up higher, up to a high of 45 cents. So I could have, from 19 cents being my average, I could have made 100%. I could have 2x this, but I suspect this one's going to go to zero. January 17th, it's not too far away, just about 2 months from now. A little too close for comfort for me. But what we can see here, let's look at the data. And, I did just put out an AMC video going over the chart. So I'd recommend checking that out, talk about my sentiment and whatnot with that. So I'm not going to go over it here. But what we can see from the underlying price in green here, prices come down, did go up, pulled back a little bit, put in a higher low. So I feel pretty good about that. And what we can see with the contract, the premium, it has come down. My average was here right around 19 cents, right around 20 cents there. And I could have made more money with that. But, I'm not going to be chasing it. I do have some other AMC calls, so I'm not too worried about that. And something that I find this chart to be really useful in interpreting the options data. What we have in blue is the volume, and in orange is the open interest. So what we want to see is when we see a spike in volume, we see a spike in open interest, and that open interest hold. And we saw that with the spike here, and that spike represented a total premium traded on the day of, let's see if I can get that data point there. Let's see. So for that point, it's $180,000 in premium there. We also saw another spike in premium that was 224, almost 225,000. So almost $250,000 that was traded on the 12th. So, pretty big spike there. But then if we see the total premium did pull back, but the open interest has just been going higher with these two spikes in volume. So I think that's looking really good. So even though, just for me, for managing my emotions, managing my, psychology, it's too close for comfort with the January 17th expiration, but it's still worth tracking. So I'm going to continue to track this. So don't worry about that. I will probably track it until expiration. And with it, let's see, the average for Friday, the 15th, was 33. So, with my average at 19 cents, I should have just held them. But, that's part of the business is, taking profits. Nobody ever lost money taking profits. So, I took some profits and I don't have to deal with the emotions of this. So that's fine. And so I think AMC, based on this contract and the data here, I think it's looking really good. So I feel like bottom is in or near. I think like in the video I talked about, I think we might see a little bit more of a pullback to like 440. But I think that things are looking pretty good for AMC in the months ahead. But with that being said, now I'm going to switch over to this call, which is also the $8 strike, but this one expires June 20th of 2025. So this is one that I have been accumulating. I don't have any buys placed right now just because I kind of gotten spread thin with, some other trades that, might not be working out so well. And so I've kind of got to assess that this week or in the coming weeks. How do I want to get out of those positions without taking an L? And so this one, I'm pretty confident I'm not going to take an L on it, but because I've been, like a little shaky on some other positions, just been adding to them a little bit aggressively, I did adjust my limit buys to not just being 100, 200, up to 500, because I have 5 contracts. I do have a limit sell at 60%. I might remove that, but I am working Monday and Tuesday, so maybe it's good for me to just have that so then I have some cash on the side for either AMC or other positions. I just got to manage that because what we can see is my average is 53 cents. The average for Friday was 73 cents, so 75 cents, sorry. So I am in the green. I believe 60% for me is, let's see, would be 86 cents, but I'm just going to pull up the calculator so we can see that. So 53 cents times 1.6, 85, I guess. So I thought I had a limit sell at 86 cents, but maybe it's 85. I'm not sure. But anyways, I'm probably going to adjust that because got plenty of time before this expires, and I definitely think that AMC actually, yeah, I'm going to do this. I'm not going to adjust it in my on my phone. I'm just going to note it. I've got a little notepad here, but AMC, I'm going to say 60% needs to get adjusted to 500% because I still do have the 100 up to 400 placed there. So yeah, limit sell increments, basically really just going back to this thesis of, 100% and then 1x. I do feel pretty confident in this contract because the expiration date is so far from now. But anyways, enough rambling about, my position and whatnot. Let's see. Something that doesn't look so good about this one, and, it's also just, 8 months away, so maybe that's just a factor. We saw this spike in volume on, let's see, that is this point here, November 13th, so that was on Wednesday. See the spike in volume, and then we actually see the open interest drop. So it doesn't look so good there. What we see in the total premium, that was pulling out a good amount of money, and the total premium traded on that day was like 63,000. But, really that's just like 6 degens YOLOing on Wall Street bets. So I think, take that with a grain of salt. What we see overall is that the open interest has been increasing. Even with this little bit of a pullback, it's still higher than it was over here. So I think that's looking pretty good. We did see a spike in the premium for this contract in blue here, pulling back a little bit, but I think it's going to be putting in higher lows. So, I think I'm going to be sitting pretty with these 5 contracts at an average price of 53 cents. And so, I don't have a buy placed on this, but, what I should probably do, and I will note this, I'm just going to note it in my notepad, so I'm not taking up time on the spreadsheet. But so AMC, 53 cent alert. I'm just writing that down with my sloppy handwriting in my notepad. But I need to have an alert there. So if it does pull back to my average, then, it's like, okay, now, maybe I want to start adding more to it. But I feel like I'm, like I said, sitting pretty. And I think that some of these contracts or these limit orders, might be getting filled in the coming weeks and or months. But I think that AMC is looking pretty good. So I feel like the next couple months, this 100%, maybe the 200% orders might be getting filled. But yeah, I did go over the analysis of the chart in the recent AMC video, so I'd recommend checking that out. Oh, and actually, maybe I want to just include that here. And so DGen Ed, I will, let's see, go to the channel over here, video, and this is one that I will copy and put into the spreadsheet here. And I can actually edit this to, I don't need this garbage there, I don't believe. There we go. So I got that link there, useful for me, and maybe I want to include that for this as well, and the next one as well. So here, just copying that. And one thing that I should note, I'm really just doing this for myself, but if you guys want me to have this as a Google spreadsheet, a Google Docs, that you guys can publicly access but not publicly edit, let me know in the comments. I'd be happy to do that, but I just haven't, it's extra work for me, and nobody's expressed that kind of interest, so I haven't done it yet. But yeah, so moving on to the next AMC contract. This is one, I just have one, kind of lame position at 35 cents. I bought that back on November 4th. And I should note, Ned, I said Ned, I meant Ed. Ed has disappeared. I'll bring him back because I did just note that, November 4th, got to have Ed with us. Otherwise, it gets lonely for me. But anyways, I just have one contract, so pretty lame. Down here, though, sitting pretty. The average for Friday the 15th was 51 cents. I don't have a limit sell place because this expires. Oh, I should have noted, this is the $20 call expiring January 16th of 2026. So I got more than a year to hold this. And, if it pulls back to 35 cents, then I could add more. If it goes up to 70 cents, that'd be a 2x, 100%. Then I maybe want to take profits then, but I'm not too concerned about it. And so really, once this prior contract, the one that's $8 strike at June 20th, once these orders start getting filled, those limit sells, then maybe I would want to think about taking profits with this one. But I just have one contract. I'm risking 35 cents. So, I think that this one could be getting up into the maybe 10x category. I could see this going up to, that would be $3.50, $350, $3.50. That's $350 to buy one contract. I could see that happening. So this, maybe is a 10x. So maybe I want to note that here. I don't have something placed, but maybe this is a, 1000x trade. Just a thought there. But anyways, what we could see, just the bump there. We saw the spike in the volume over here, and the open interest has resided elevated, but it's kind of like wiggled around here. We do see that the implied volatility has spiked up. Maybe we see that cool off a little bit. And with that, maybe price cools off a little bit, or the premium cools off a little bit before moving higher. But yeah, this y-axis is different than the other AMC tabs, and that's because, I got the strike up here at $20. So we got a ways to go to get up to that. And so I don't necessarily expect this to expire in the money, but I do think that it could be going up to $20 a share. I talked about that in the AMC video. About this potentially going up to 20, but then pulling back and maybe consolidating around 12. So yeah, I think that this could definitely be like 10x, a 10 bagger, if you will. But yeah, that is basically my thesis on AMC with these calls. Would like to add, but I don't have any buys with any of these because I am green. I don't necessarily want to be bringing my average up because I got other stuff to be dealing with. But, the next one on here, which I don't have any of, is Celsius, ticker symbol CELH. This is the $50 call expiring March 21st. This is not June because data is limited as far as what I have access to with unusual whales. But I just kind of wanted to track this because Mr. Chart Norris posted about it. And, I just find his analysis to be really good. And so I just kind of wanted to follow this one to see. And so he's saying that Celsius daily chart update, your lovely Celsius is breaking out from tightening falling wedge with the right shoulder of the inverse head and shoulder. But this hasn't really played out. We have put in, I believe, lower lows. So I'll go over to the chart in a second. But this is something that he posted on November 3rd. So I should highlight that November 3rd would have been over here. So he effectively posted that, between these two dates. So maybe I'll just make those green. That's when he posted that. And so let's look over at the Celsius chart. And, I have not established a position in this one. As you see, nothing over here. Part of it is just because of that 20 positions. I don't want to spread myself too thin. I just kind of wanted to watch this. And it doesn't look like the thesis has played out so well. If I do come over to Webull, we can see the Celsius chart. Yeah. So, he is saying that, this is inverse head and shoulders, but we did pull back here to a low of 25.50. So I feel like this is, not such a good one. The RSI here is at 29.72. So we're just getting into that oversold territory below 30. So maybe there's a dip buy here, but are there any technical levels if we do zoom out? Quick short answer is, yeah, I think so. We've got a low over here of 26.08. So I'm just going to connect a horizontal line to that level. But I'm going to say it's 26.08. So that is marked accordingly. And, I will make this a little bit thicker and color it yellow. So, we think about that level And then we do have, you know, the pivots over here right around 25. So let's see what's, you know, it's really like in this range. So maybe coming down to like 20 even. But yeah, over here, 25.14. That's, let's see, what's the high over here? 25.39. Maybe I want to make it, actually, I'll just make it 25. I know that's kind of an arbitrary number because it's, you know, a whole number, but I'll do that. And maybe I'll make that orange. I don't know. Maybe not necessarily red. The colors don't necessarily have any significance to me. But yeah, I mean, we could see that as maybe there's some support there, maybe coming down to like $23, $24. And so where are we at now? We're kind of getting into that range. So I could see this as being a bottom pretty soon. And let's see, maybe with this, that's a lower, maybe there's a trend line over here. So I'm just going from the low of January 28th of 2022, and then I'm going to do it with the close from May 10th of 2022, which was at a price of $13.77. Just going to lock that into place. I imagine that price is above that. Actually, it's lower. Yeah, it's above that. I was thinking that the line would be above that. But anyways, maybe we're starting to get towards a bottom. But, you know, this is why I want to track it. Not just yet. Maybe we can draw a more immediate trend line here to suggest, yeah, we might still have some more time before a bottom's in. Just lots of trend lines there, suggesting that the bottom is not in just yet. But, you know, what we could do, thinking about, yeah, I mean, the bottom's not in, so it's really just arbitrary if I'm trying to think of where could it bounce to if we haven't put a bottom in. And so what I might do, just in this time frame, do a Fibonacci retracement from here up to the top here. We've broken below that 786, so that's actually not useful. So yeah, this is weekly. I don't want it on the weekly. I want it on the daily. So maybe the bottom is approaching, maybe around 25. So maybe actually, you know, maybe I want to just put an alert here at 25. And so I'll do that, make sure that's below. Maybe we hit that, and then maybe it's time to see, is it maybe forming a bottom? And yeah, I mean, then it could be testing this downtrend, you know, right around here, maybe 24. So maybe I want to actually add a level here right around 24. Maybe I'll make this one red. That high was 24. That's beautiful. That, you know, is perfect. Make that red. And so, yeah, then maybe, you know, I'll see on the chart, maybe I do want to add another alert at $24. And this would again be below. So if it hits 25, maybe I want to consider, you know, getting a position, but one that March is too soon for me. March is a little, it makes me uncomfortable. Personally, just how I manage my emotions and stuff. And so maybe at that time I'd have unusual whales and I could look up a contract with a more feasible target. And so this is the $50 strike. So why would I think it'd go up to $50? That's up here. I feel like more realistically 30 or 35, 40, a little bit more realistic, feasible. It's what we see in the data. Some of it's encouraging, like we see this spike in the volume here and the open interest has held, but what's that spike in volume or spike in premium? That's 160,000. So that is not a degen YOLOing, 10,000 bucks. That's how you define a YOLO. This is, you know, big money. This is over 100,000. You know, it's over 10 degens. You know, if you get 10 degens together, what do you get? Maybe you get a manatee, but maybe you get a whale. Not a blue whale, but maybe a minke whale. You know, so there's something there. Maybe it's a dolphin, a little bit more advanced than a manatee. So something to consider with that. But we do have, the price coming down in green, as well as that premium coming down in green. And the reason why actually, I should adjust this y-axis to, I don't think it's going lower than 20, so I'm going to adjust that here. Format axis to the minimum of 20, because I feel like that's a little bit more online than we have that, more in sync with the premium. And so, yeah, with the premium, what we've seen, and so because I don't have the data, I don't have the data for this in unusual whales because it's not high volume traded. So it's not publicly available. So I've had to just get this data from Webull, from the options table, and so the last price is 50, and so I could see this coming down to maybe like 30, maybe finding a bottom around there, and we haven't gotten there yet. Maybe we've seen some lows around there. I'm not really sure. But yeah, this is one I'm just keeping an eye on. Maybe it's one I want to establish a position in later, but probably with a June or later expiration, not March. It's a little too close for me. But yeah, so hopefully that's helpful for you guys. And just noting that, not everybody is always right. Still have a lot of respect for Mr. Chart Norris. And he actually made a call on something that I should have taken profits on. I didn't notice, but really, just based on my analysis. So not really relying on others. There's something else that I did follow up on. But yeah, maybe I want to see what he said on this. So I'm just going to click the link here. I believe I got to right click. How do I access that hyperlink? Is it control? No. Maybe it's command. There we go. It's command for an Apple. Okay, so yeah, there's this post, Mr. Chart Norris. I'm just going to go to his page, and then I'm going to search CELH. And so this is 3 hours ago that he just posted. So CELH daily candle chart, RSI and MACD overextended to the downside. So let's actually look, from my own analysis. I was just talking about that the RSI is low. The MACD is also low. We can see that that's negative 1.5. So this could be, dip buy scenario. And he has this double, I mean, it's like, just connecting that though. So I don't know. Bullish divergence forming on daily chart. Okay, so that is a low in the stock price, whereas you do have a higher low in the RSI. However, this is pretty similar. This is 29.19. This is 29.72. It's effectively the same. And really, we haven't seen a bottom indication here. So I think that this could go lower. And so, while I do have a lot of conviction in his analysis, I want to have conviction with my analysis as well. And so RSI below oversold zone on the daily, but just barely. I think it could go lower. Sign of short-term reversal with the RSI MACD. Bullish divergence. I'd like to see this starting to go up, and this actually be a bottom in the RSI. It could still go lower next week. So I think this is still kind of risky, at least for my tolerance. But maybe this contract is, worth it. Let's see what the comments are here. What people said. Any upside target for short-term reversal? Thank you. No response. And this is somebody posting about something else, so not useful. But yeah, there is that. And maybe I want to copy this link and put that in the spreadsheet here. So I have that down there. And I don't want that font. Oops. Match destination. And I'm just going to hit the returns. There's a hyperlink there. And I guess I'll just take a screenshot of it. Why not? You guys can skip to the next one if you find this boring, but I think this is helpful for just keeping track of stuff. You know, got to be accountable. I think that's a really important part of trading is, you know, following up on things, whether they're successes or failures. And so I think this one, you know, this did not hold the pattern from here, that head and shoulders pattern, inverse head and shoulders pattern. So yeah, but maybe the bottom's in. We'll have to see. But anyways, enough rambling about that. I am going to continue on to the next one, which is FSLY, ticker symbol FSLY. This is a $10 strike expiring June 20th, so it is that date that I like. This is one that I hold. I had previously taken profits on this, and I should have stayed away from it. I did get back in at 72 cents, and then, you know, it's just bled, and I've been accumulating. Now I have 5 contracts. I'm in the red. My position average is now at 62 cents, with the high from Friday being 55 cents. The previous day on Thursday, and the day before that was, you know, 63, 64 cents highs, but my average on those days was above 62. So I couldn't have taken profits. But, you know, my analysis on this one I think is really fun. I really like the chart here. I don't believe this is all my analysis. This is, you know, I think it's a good example of, you know, when a trade works out, don't chase it. Don't, you know, FOMO back in. So I had this, you know, cup and handle pattern, big move up, but it didn't get up to my target of around $10. Hit a high of, let's see, around 876 on the 7th, and then it pulled back. And so I thought it was just going to be, you know, pulling back to test this handle before continuing higher, because we did break above here, got a confirming close above. And so I would think that, you know, any pullback, it's probably going to test this and respect it. But then we did get this, you know, big pullback. One thing that happened is somebody commented on, you know, the video that I posted about this. Somebody commented on X. So I'll just look at my notifications. Let's see. Somebody posted on this. Let's see. They posted something that makes me think, yeah, this to me is like a comment that somebody posts first 40% down before 40% up. So just like trolling me on this video that I talked about, this cup and handle pattern. And it's like, well, I'm sorry, if you didn't take profits on this big move up, you know, that's on you, because there was a nice bounce. The 40% move didn't happen, but there was a 20% move. It does look like we've pulled back, consolidated. It looks like forming a bear flag. But personally, I think this could be kind of like a fake out dip, that we will be reclaiming these levels. And the reason is because, you know, these trend lines, it's all kind of arbitrary. I had talked about 703 being like an alert level for cutting losses. I didn't do that because I thought we might get this, you know, a wick lower, close above, and then it takes off. That's exactly what we got, sweeping the lows. You know, so I feel like that's kind of an arbitrary level, but we've only gotten one close below it. If it is significant, we've only gotten one close below, you know, really any of these lows. And that was on Friday when we closed at 641. So I feel like this could still be a fake out break below. And what I wanted to do is do a, sorry, I got to crack my neck a little bit. Back gets a little tight sitting in the chair for so long. But yeah, just doing a Fibonacci from the low here at 552 up to the high here at 876. I'm just going to make sure those levels are correct, and they are. And so we can see that we've got support just below current price at 621. We're above it, so we may not actually get to that level. And we do see a lot of consolidation here. So I haven't had this up on the chart in a while, but if I do throw up the volume profile, we are getting into, you know, what I view as some support down there. So for me, you know, I might have been wrong starting to accumulate here. And so like if I do look back at the spreadsheet. I started accumulating on the 11th, really every day last week. And so on the 11th, that was here. Yeah, I mean, I started accumulating in this range, and then the breakdown, I still think it's good to be accumulating and doing that on a daily basis. So that's, my thesis with this is that, I am correct until proven wrong. And this break, I think, is really just a dip buying opportunity. We'll have to see what happens on Monday. Maybe I'm wrong. Maybe this starts to close lower and it closes lower than this low. And I think this low that we hit is actually a very important level for closes. We do not want to see a close below this level, which I think would be a confirming close. So the low on Friday was 631. So I'm just going to get this lined up to 631. I want to keep an eye on that. And so that I view as a pretty important level. I'm going to make that purple. Purple, is always, I like the color. It just stands out to me as being one that, it's good to be paying attention to. And so I think we do not want to see closes below 631. If we do, maybe I want to reevaluate my thesis that this is not going to $10 a share. But, I could still be getting my average down with this contract. And so with it, yeah, I mean, I did, buy here, and the low on Friday was 43 cents. So I kind of bought the low there. I don't think I need to be throwing more money at this until, I see what happens, on Monday. And maybe that makes me think, well, I should be getting my average down while it's low. Or maybe it gets me thinking that, I was wrong. And, I need to think about, aggressively getting my average down when it starts to flatten out. So then when it pops, I can cut my losses or, take profits, break even. And so right now, it looks like I have a limit sell at 10% profit because I've kind of been wrong with this. And 10%, with 5 of these, that's effectively 50% on one contract. So, I think that's a good trade. But yeah, I'll just kind of reevaluate what happens on Monday. And yeah, I mean, what we can see with this, looking at the data, volume, there have been some spikes with it. And with those spikes, we've seen the open interest going up. So that makes me feel good about it. But, what is the premium on those spikes? At most 5,000. So that's half a YOLO. So that's small money. These are manatees. If even. So, I don't think that this data is really supportive of the thesis necessarily. But I do think that getting sentiment, getting people, you're wrong, even though, I was right with this happening with this bounce, this breakdown hasn't necessarily sealed the deal for me that I'm wrong. And so I want to see how the 786 is respected. And in the meantime, if we start to form a bottom here, one contract per day, I don't want to be more aggressive than that because the way that I wrote this, done the math in Excel, kind of makes it look a little bit ugly if I have multiple contracts in the same day. So I'm just doing, a DCA, no orders placed because I effectively did buy the bottom there at 44 cents. Because if I had a limit placed at 43, it might not have gotten filled. And, I think 40 cents, maybe that gets hit on Monday. And then it's like, well, maybe then I'll place a limit for 40 cents if it looks like we're starting to put a bottom in. But yeah, this one, I'm kind of disappointed in what happened with the chart. But, when you get that sentiment of people, oh, you're wrong. Oh, you're an idiot. If anybody begins something with, that's a bottom indicator. And so I think that we may have seen that with FSLY. So I'm excited to see what happens on Monday, but I'm at work again. So if in case I'm wrong, I am risking, let's see, what is the sum of these? How much am I risking on this? Oh, and then I want to multiply that by 100. I'm risking over $300. So a 10% profit would be like 34 bucks. So that's not nothing. It's about the same that I got over here. So Yeah, and I'd probably reevaluate this, following, working Monday and Tuesday. But yeah, I just can't be like sitting down and looking at it, and I've too aggressively accumulated, I think, as it's just been bleeding over here with the underlying stock price coming down as I'd shown in the chart, and then that premium coming down. My average has been coming down, but it's also, lower than it was over here because I just had one contract. My average was 89 cents. I bought back at 72, so good for me there. But maybe this is, just going to bleed to nothing, so I do have to consider that. But it's June 20th. I got plenty of time, so not too worried. So, yeah. Anyways, the next one on the list is FUBO with a $2 strike. This is a call expiring May 16th. And so there just wasn't a monthly contract for June. And so that's why I'm tracking May. I do have a position in this. It looks like I just have 3 contracts. My average is 30 cents, and I do have a limit sell order placed for 20 cents. And this is also based on some analysis from Mr. Chart Norris. $1.50 being a gift. And if we do look over this, okay, there we go. The big cursor makes it kind of hard to move. If we do look over at the chart, $1.50, we actually got a dip to $1.40. Price is still, around $1.50. So I feel like, that thesis is still intact, even though the green here has, been kind of consolidating over here in a way that is not necessarily what I expected. But let's see, what does Mr. Chart Norris have to say about this? So actually, the way that I'm going to do this, I'm just going to command click on that link. Let's see, command. Okay, I guess I don't have to do command. Click. Yeah, so this is, the little baby looking at that from the analysis that I was talking about. But let's just go to his main page and then do a search of FUBO to see what he said most recently. And so this is October 24th. October 11th. Let's see the latest. What has he followed up with? This was November 12th, so over the past week. The bigger picture. So you got to think about the bigger picture. And this is still looking good. So that's reassuring. And yeah, I think I had actually posted something about this, about, it seems like an easy 2x swing. I personally, I'm just not too like emotionally convicted in the FUBO play, but maybe that's something that I want to consider. So I'm just going to copy this link, add it to the spreadsheet over here below my analysis, and so I'll just put that there, and I'm just going to match destination and have that hyperlink there. Take a screenshot of this to add to the spreadsheet. And so put that there. And I just don't like it when they're super large, so I'm going to adjust that. All right, and then so we also have some of my analysis too, but I'll kind of elaborate on it in the chart, kind of based on the trend line that he drew, which you could probably guess is going back to the high of August 19th, but let's actually see. That looks like it has the high. Oh, this actually, so I was talking about this high of August 19th. This is FuboTV. Okay, yeah. August 19th. Yeah, so that would be this high. Yeah. I imagine this is the 1 month. Oh, this is, wow. August 2023 or whatever this is. Maybe that's, wow. Yeah, so this is big picture pretty good. So, I mean, even just here on the smaller time frame, we can draw a trend line from this high to the highs over here. Just being approximate, not going to lock that into place. And then if I do switch over to, maybe I do want to lock that into place if I'm going to switch over to the monthly. Sometimes things, move around. But yeah, I mean, what he's talking about is This is the monthly going back to, oh, that's 2022, actually, August 2022, because 2023 begins over here. So the highs in 2022. That's this. Yep. And so we can see that connecting those two pivot points that we have, monthly here, monthly there. And we've actually broken out. So this is looking good, but considering that this is the monthly, let's see, the contracts that I have, expire in May. So this is a few months away. So yeah, I mean, I think that getting out at 20%, that's, seems like a fine strategy. In my view, I'm going to just make this, I don't make too many greens, so I'll make that green. So I know that when I do switch over to the daily, yeah, we've consolidated, we've broken above that and, consolidated above it. It looks like a double bottom here. So yeah, I mean, I think that this is looking really good. $2 strike though. $2 is, up here. It's pretty reasonable. So 20%, yeah, I mean, because I just don't want to be holding these forever and ever. I do have a dip buy placed at 20 cents. If it does pull back to that, which it did hit on the 11th, if I just scroll up above Ed's head there, you can see that November 11th, the low is 20 cents. Also on the 8th, it looks like also 20 cents. But considering, that, I think it's good to add, and then that would get my average down to, I think around 27.5 cents. I think whatever the average is there. Yeah, I don't know. Mental math, and I don't want to screw up the spreadsheet here, but yeah, 20% swing. And if I have 3 of these, I'm risking $90. So 20%, that's $18 profit. So yeah, I'll take it. Why not? This is not about holding, diamond handing until May 16th. This is about taking profits. And I think that this could definitely very easily be going up to 20%. I think that it could even be getting up to 100%. And so maybe that's something that I want to note here. Oops, got a 100%. Maybe I want to do a FUBO. Because I have 3 contracts, I can do 2 at 20% and 1 for a 100% swing. Or maybe I want to do that at 80%, kind of, like balancing that between, 20 and 80. So I think that's kind of what I'd like to do with this. But let's just look at the data. I've been rambling a lot about, the chart and Mr. Chart Norris and stuff. And so let's actually look at the data here. And so what we can see in the volume, we've seen these pretty nice spikes, and open interest has just been steadily going up. So looking really good there. These spikes, however, they correspond to like $25,000. So, again, it's like 2.5 degens YOLOing on this. So it's not huge. But it's also like a $2 stock, less than $2 stock. So I don't expect, big money. I don't expect blue whales to be in on this. And let's see. I think that this looks good. I'm adjusting that from 20 to 80%. For one of the contracts, the other 2 would be sold at 20%. But yeah, I feel like this is looking good. I think that dip buy here at 20 cents, if that happens, I think that's great. And I'll be excited about that. If it doesn't happen, I just got $20 sitting on the side. No big deal. So yeah, I mean, that's pretty much all of my thoughts on FUBO. And so now I will switch over to the GameStop call, which did expire yesterday on November 15th. This is a $25 strike. And this was actually like a really nice example of when people do, send alerts, like the Bronx Viking post. I'm just going to go over a little bit so you can see it better. This is not a drill, everyone. I repeat, this is not a drill. My custom, GameStop Roaring Kitty unusual whale alerts just got triggered. And so this was on, let's see, you don't have the date up here because it just says 7 hours ago. But if I do scroll over here, I did note when he posted that was on the 5th. And we can see that the premium, we can see above Ed's head, we can see that for the 5th, that the premium ranged from 49 cents to 99 cents. So even if you bought the high on that day, or even if you bought the high the following day, because you saw this tweet after close, the high was 104. Where did it go from there? We can see that the highest that it went to was $3.55. So from this high the following day of 104, you definitely easily could have, 2x'd, because we could see that, from 104, even maybe easily, let's take that with a grain of salt, because, well, let's look at the average, because the lows, the highest low was 190, so that's not a 2x, but the highest average was 250, and this was from, easily, I think reasonably, not easily, reasonably, very reasonably, could have 2x from this. So I think that's very nice. Good to kind of recognize that, even if these are short dated, if there are alerts associated with somebody like Roaring Kitty, or just, there is a whale really establishing themselves in a position, I think that's a good buy indicator, even if it's just a couple weeks out, which makes me a little bit antsy. The data here clearly shows that premium from the 5th, even the day after, and also, following that, it did pull back. It did pull back to 89 cents, so 50 cent range, 70 cents. That was a dip buying opportunity there for, 2x, 3x, 4x, I think. So really nice there. These did expire in the money. GameStop, let's flip over to the chart to look at that. GameStop closed above $25 a share. So this closed in the money. If we look at, I'm not going to have any more data on this. We do see that people were, taking profits and or exercising, closing their positions, because the change was just decreasing last week because of that expiration coming close. But I'm not sure how many of these were closed on, all of them were closed on Friday. But there were still 11.5 thousand contracts open. Some of them, I imagine, were exercised, so I suspect that GameStop will probably be going higher next week, gamma ramping because of this. But also, I think people, just taking profits on these because, this really went up a lot. And as you can see, the volatility, or the implied volatility really ramped up on Friday, and that's because of expiration. And so this, was above the strike of $25 at close, and would have had to be pretty volatile for it to come back to zero, as far as I understand that. So, yeah, this looks really good. Congrats if you traded it. I did not, but because this expired, because I don't have another GameStop contract to follow, I will follow another one that, I think kind of like meets my, technical analysis criteria, which would effectively be a strike of $50. This one, 25. Yeah, so let's see. I'll just go over to the options data over here, which, I have very limited access to because I'm not a subscriber of Unusual Whales currently, but I'm just going to look up GameStop contract. I want to look up a $50 strike that expires, a while from now. And so let's see. There's $100. That's January. It's a little too close for comfort. This is a call. Okay, so, and I want to pick ones that, I will be able to get the data on. I don't want to just get one that I'm not going to be able to see. So, because there's this one like 41. Let's look at that, but I'm probably not going to add it to this list because it's kind of a little obscure. And I think that, and that's, April. Let's see, January 60. Maybe that's one. But, I think from my analysis, 50 is an appealing strike. And this is, one that Oh, wait, that's November. I want, oh, January right here. So yeah, that's a couple months from now. So that's, I'd have 8 videos effectively on that. And so, yeah, let's just look at these. And so this $41 one, that's in April. What is the buy of that? $600. So that's a little too pricey for me. So that, like, I would not really want to partake in that. So no, thank you. It's just too far out. And, it is a very reasonable strike. So I feel like those are more likely to close in the money or get into the money from current price, which is, following after hours trading, I believe, is 26.64. But so, yeah, oops. So in going over here, I need a contract lookup. I'm just going to minimize that. And so, crap. That got removed. That's annoying. So yeah, I don't want to delete those before. So let's see. I had the $50. Oh, there's a $60 call for March. That's, 60. Let's look at the chart. Why 60? It went up to 60 here. Yeah, so that's pretty reasonable. So yeah, actually, I think I want to add this one. Oh, dang it. I don't want to add that one. I'm going to have to do this again. But yeah, I got to be more careful. Contract lookup, GameStop. And, yeah, okay, so I saw one that was 60. I thought I saw the one that was 60. Yeah, anyways. I think this one, 30. Okay, so 50, I'm interested in that one. 30, this one's probably going to be pricey. But look at that one as well. These are ones that I should consider. And then January. I thought I saw one that was like March. Expiration, so I got 50, 30. Let's see. This is a month from now. Yeah, I thought I saw something that's like 30. That's in March. Yeah, did I see something that's in March? No, I must have been I was looking at a different, I'm an idiot. I was probably looking at Lucid or something. God, I'm stupid. It's DGenEd though. That's what you get. Okay, so 50, 30. I thought I saw like a 60 or something that was interesting. Maybe a 40. 30. I got 30 for January. Maybe like a 30 for 60. I've got that. Oh, no. I'll add that. Yeah, because, any of those, it could be going up. It could be going up because I think there's just a lot of bullish stuff going on with GameStop. And let's see. 50, 30, 60. Is there like a 40 or something? 40. Okay, so I've got kind of a variety for January expiration, which makes me feel more comfortable for swing trading. Okay, and so now let's look at the data. First, starting with 60. What's the premium for this? Dang, man. It's like $300. That's too much. And it's like 60. This one's going to be like $300. This one's going to be like 400. This one's going to be like 500. Yeah. So crap. Yeah, this is why I don't really track GameStop too much because it's just gets to be too much. The time was, a couple weeks ago to establish positions. Maybe I want to look up something else that's just like closer. So let's see, maybe something in January or December. So let's see, I thought I saw something. December 30th, yeah, so or December 20th, $30 strike. This is 31. I don't know how popular that would be. And so the monthly contracts for November have already passed. That was yesterday, the 15th. But let's see. In a couple weeks, some of these can make money. So let's see. What's another one? 30, 15. These are all the 15th. 30. Maybe this, but it's like a little close for comfort for me, in my opinion. November 15th, November 29th, 40. Maybe that's one. November 29th, 30. Yeah, so let's look at some of these. This is $400. This one's more interesting to me, but it's like the 22nd, which is this coming Friday. So this could definitely be going to zero. Yeah, so I think that's risky. The 29th for $40 strike. This is below $100, so that one's intriguing to me. And, you know, I don't want to delete any of these because it will wipe it away. And so I need to decide which one. This one is like around 180, 30. Both of these a couple weeks from now. So I'll probably add one of those or both of them to next week's options video because they're just like more in my price range as far as risk goes. And I think that, you know, I think that we could be seeing cool off. You know, we bumped into this resistance here, which was the lows over here. And so it's not too surprising that we're getting rejected from here, but, you know, this could be a bull flag and this just starts to take off, especially because it closed above max pain, which I believe was 2450 or 25. I think it was 2450 for yesterday on the 15th. And so, yeah, I mean, this could just be, you know, starting to go higher. Like I think we could be seeing 50. So, yeah, I mean, I might be interested at least to track these. I have shares, so yes. So I'm fine with whatever happens here. But yeah, looking at this, I need to continue on. I've been doing this for over an hour now. I need to continue on to the next ticker. But before I do that, I'm going to have another sip of my coffee. And then I will continue on with Hycroft Mining. And so this is one I do have a position in. My average is 59 cents, which, you know, we were trading at on Friday. So I could have gotten out of my position if I wanted to. But, you know, I feel like, you know, I want to get 20% at least on this. And I am holding, let's see, it looks like 1, 2, 3, 4, 5 contracts. And so I'm risking, you know, let's see. This times 500, 5 contracts, 100 shares per contract. I'm risking about $300 on this. So maybe what I should have done is trimmed at break even to then be able to buy back lower. And so that's something that I maybe want to consider, not to close my position, but to trim at different levels, and, you know, going up to 20% maybe. And so looking at the chart over here for Hycroft, you know, I still think that, you know, this could be in play. It does look like we have pulled back to kind of like retest it. Whether it's this downtrending level, it closed below, so that's a little bearish. But this level, this yellow line, which I think is, you know, still pretty notable, even though we did break below it multiple times and are effectively below it, technically below it right now. But yeah, 245, that's a level that I have an alert at, 246, so right around there. So I don't think that really looks too bad. But what I should probably do for me, because I have more than one contract, is trim it break even, because then, you know, I could still hold this buy at 40 cents. Maybe we don't go down to 40 cents. But if I trim at break even, then I could buy back lower. So I think what I want to do with Hycroft, for me personally, is offload one at break even. I'm just putting this in my notepad. Offload another at 10%, and then offload the rest at 20%. And so I'm just gonna put this here, and so this would be 0, this would be 10. And just to, so I have, more cash on the side, so I can be a little more comfy. $60 per one of these, and then that would be making a little less than $6 off that premium. So, excuse me, I think that's good. And yeah, we'll have to see what happens with that. But yeah, let's just look at the data here really quick. I've got this, that's a buy for me. That's kind of how I note them. And so we can see that, price has been, that's in green, going up higher or lower lows, lower lows, lower highs. But hopefully, this pullback that we're seeing, hopefully we're able to put in, lower lows. Okay, yeah, so this, what we saw over here is, what is the date here? That's the 11th. So that's the 15th. This is, oh wait, no, that's not. That's the 15th there. That has got to be the 8th. Hycroft. Hycroft, what? Oh yeah, this is because it's just the time frame that I'm looking at. Over here, it does look like, lower lows. It's just that I'm not looking at all the data. And so this is, just kind of complementary to really, want to be looking at this data. But, just going over the chart and stuff, this is lower lows on the shorter time frame. But we're still putting in higher lows relative to this one. So I feel like that is an important level. I'm just going to make that thick. So yeah, I think this is looking good. Pullbacks, can delete that because that's that gap's been filled. But yeah, this is uptrending support, higher lows here, and yeah, but I don't want to be diamond handing forever, especially, and and maybe I want to do an 80% over there, and so just to hold some for the longer, because I don't know that I mentioned this at the start of Hycroft, but this is for the $3 call that expires May 16th of 2025. So got 7 months until then, exactly 7 months. So yeah, I think it's all right to kind of hold this one, but want to be trimming, taking profits as it goes up, and then be able to buy back comfortably if it does pull back below the average, just comfortably hold, And yeah, so my average is up here, and we did get it looks like this is the average. Yes, this is coming from Unusual Whales. The average has been below my average, so we're not seeing it on the chart. And so, yeah, I think I do want to be able to trim a little bit at break even, 10%, 20% majority, and then the rest at 80%. And so what we can see here in the volume, as we've seen these spikes, we've seen the open interest going up, so that looks really good. The spike that we saw over here corresponded with a premium of about $4,000. So that's not even half of 1 day gen YOLOing. So take this all with a grain of salt, because this is not Unusual Whales. This is, minnows, fish, manatees. So yeah, this is manatees. I think this is manatees. I like that because I guess, well, a manatee is a whale, but it's not an unusual whale. Go down to Florida. I used to live in Florida. You see manatees all over the place, just little islands. Just, that's all they do. Yeah, so nothing too crazy. Just munching on the seagrass. Anyways, with that rambling, we see this spike here. I'm very curious to see the data coming Monday to see if open interest is continuing to go up, because we see that spike. That's almost 4,000 in premium, $3,825. So I'd like to see that open interest continuing up, but buying the dip. But maybe some stop losses were hit. So yeah, I feel good about this one. I feel fine about this one until May 16th. So yeah, happy to add at 40 cents. But given that 40 cents was like the low over here, I guess we had a low of 30 cents. It's not really showing in the chart. Oh yeah, because it's a low. It was low 39s. That would have been the 8th. So that's behind Ed's head there. You can see that is the 8th. And so over here, that corresponds with this one. Oh, well, got to click on that so we can see that's not, what is that point? The 8th, there we go. So that corresponds with this low, even though, yeah, the low is actually 30 cents. And on that day, I didn't have, the lowest buy that I've had was 45 cents. So yeah, I think that this is good. You know, I'm happy I went over this. I need to, after I record this, I need to update my orders. But I do like this strategy with it, just taking the risk off the table. So if it does pull back, if things start to collapse, there's less risk on the table, and it's more comfortably at or reevaluate. Anyways, with the note of taking risk off the table, I did that a little too much with this one, which is the Lucid, ticker symbol LCID, $3 call that expires June 20th. I swung a couple calls last week. Part of the reason why I bought back is because I made this video and thought I adjusted my limit sells. So I had a contract at an average of 40 cents. I thought I adjusted it to 20% take profit, or sorry, a 20% take profit. It will be 44 cents. But I had a limit at 41 cents. That was filled. I could have made that 20%. I was just like, dang it, you know, I was an idiot. You know, I basically was at break even, made 92 cents on it, so nothing big. But, you know, I saw that, well, you know, if it does dip to 36 cents, I had a buy placed there, then, you know, I'll get another contract. And so that's what happened. And then I placed an order for 20% swing, made that just a little under $7. So nothing like too crazy, but, you know, just practicing swinging these calls. And yeah, why did I take profits at 20%? Why did I not buy back at 36 cents or 31 cents? So the reason for that is if we do look over at the chart, I started to think, you know, maybe we are looking at a bear flag here, and maybe we start to break that bear flag. And I don't like the white lines there, so I'm just going to remove them. And so, you know, I was just thinking maybe this is a bear flag. This is not a bottom. We did put in a lower low on the 6th. And so, you know, I had this order filled on the 12th. And so, you know, I was just thinking, well, I mean, we got a bounce there, but it is a lower low. We are consolidating here. We didn't get a violent move to the upside. Maybe this is a bear flag. I'm getting a little antsy, and it's just not worth it. And sure enough, we did, you know, like break below that and start to go lower. And so on the 12th, on the 13th, which was this day, we got a pump up, but then a pullback. That's kind of like a gravestone doji, although, you know, we want to see that at the bottom there. And that just suggested to me that, you know, sellers were dumping this up here, and, you know, I should consider getting out. And so I did at 20%. I did not buy back in, and we are now lower. And, you know, so chart here, when it goes to like 0 and stuff, it looks kind of weird. But the stock price is just going lower. The premium is just going lower. It's just too risky for me. It's not worth the risk. But yeah, I mean, I guess I did have some levels. So let's maybe go back to the chart. Yeah, so we're at all-time lows. The 52-week low is 193. And if we go back, you know, more than a year, that's the all-time low. Yeah. So we're putting in new lows, price discovery to the downside. Where could this be finding a bottom? Maybe we could draw a trend line here to suggest where that bottom could be. But, you know, if it's downtrending support, it doesn't have to respect it. So yeah, this is one, I'm glad I made a little bit of money. I'm glad I swung it. I'm not even going to be tracking it anymore because I just think it's too risky, so glad I made profits with that. 20%, good, an important part of that thesis. And yeah, I mean, because I sold at 43 cents here. I could have, let's see. Let's pull up that calculator. And so, if my position was at 40 cents, I'm risking $40. Let's see, what is 40% swing there? 56. That would not have been filled. So I think it's good to not be greedy. If my position's at 40 cents, could I have made 30% profit? 52 cents. That would not have been filled. The high on the 13th was 51 cents. So yeah, good to not be greedy. 20% for the win there. So I feel good about that. So yeah, I mean, hopefully that's helpful. But yeah, I'm not going to cover this one anymore. And then the next one on the list is Marathon Digital. I wanted to follow this because, Volatility did post this. I went over this last week. Just kind of a number of bullish things, and just like with Bitcoin making new all-time highs, it just seemed like a smart play. But I just kind of wanted to track, he posted this on November 8th. We see November 8th over here. We have the range here. So let's say you bought the high at 162, or let's say you bought the low or the average the following week. Even the average, you wouldn't have been able to, because let's say you saw this post after the market closed. Let's say buying the low at $2.16 or maybe $3. You could have, 33% gains, that going from like $3 to $4. I think this could still go higher. This is the Mara $35 call expiring March 21st. So there's plenty of time before it to go. And, I think that Bitcoin could be hitting 100,000 before Thanksgiving. I think it could be hitting 100,000 before the end of the year. And with that, I think that miners could be going a lot higher. And so, yeah, I mean, what we've seen following, this, which would have been, the 8th. So right here, we've seen the premium going up quite a lot from there. Even if you bought at the average the following day, which was 312, it went up to about $4. So that's a nice swing. And the underlying stock price did go up and then pull back. What we can see in the volume is a spike up, and with that spike up, we've seen that open interest continuing up again with this spike over here, so people not dumping, and we see that those spikes correspond with $2 million, so that is definitely a whale. I don't got $2 million to be dumping into this, so, looking good there, and we've got, let's see, 4 months before the expiration, so I think that's looking good. And yeah, actually the ones that expire in June, that's 6 months there, and then really just anyways, I'm thinking too much. Getting, starting with the time zero, which is now, this is 3 months, and then, adding the 1 month to December, and then January, March, February, March. So that's, 4 months. Okay. So the ones that expire in June, 6 months in the new year, and then we just have this one additional month. So those are 7 months down the road to the expiration, 7 months of time passing. But anyways, I think this looks good, but too risky for me. I'm just holding my Bitcoin, so I feel good about it. We can look over at the chart, and this is cool. I'm not sure. I think I drew this for the video last week, maybe. I'm not sure when I started looking at Mara. But, this moved up quicker to this level than I was expecting, but then it did pull back to test this, kind of as I expected. And so now I think that this could be bouncing even higher. And so if we get, really, this would be a measurement to the break day here. And so I think this could be going up to 27. And so with the strike of 35, I mean, I think that this is looking good. And that also does correspond with like the high over here. So makes sense that there'd be some resistance there. Maybe that corresponds with, Bitcoin hitting 100,000 when this hits around 35. And then this contract would be in the money. I think that'd be a good time to take profits. But yeah, millions of dollars traded on this one, and the premium or the open interest going up. So I think it's just looking really good. But then it's just a question of, do you want to risk over $100 per contract? For me personally, no. But I do want to watch. I do want to see. I think that this was a really great post from Volatility. And so I'm actually going to click that. And I believe I've liked it. Yes. So just want to make sure that I like that. And yeah, so that is pretty much it for Marathon Digital. I'm just going to have a sip of coffee. I'm getting hungry, though. I've been doing this for an hour and a half. I'm going to need to eat some food, but I'll finish this video first. Okay, so the next one on here is this is Moderna, ticker symbol MRNA, $60 call expiring April 17th. And so I've got all of the data here. I wanted to go over this. I posted this to the channel. This is just going over the game plan from Gareth Soloway's channel, Verified Investing. You can follow either Gareth Soloway or Verified Investing. Subscribe to either of those channels. He was talking about Alibaba and Chinese stocks, which relates to NIO. I'll go over NIO next. But also, potential trade with Moderna, which I may add to the option theses video. And so I am doing that. And so his thesis is kind of based on this channel that I've drawn. So I'll just go over that in the chart. And then I'll go over the data here. And so, what he pointed out, which I was not aware of, I don't follow this stock, but now I do. I've got some alerts. He was talking about, if this goes down to like 32. So I got an alert there at $32, maybe, $30, testing the bottom of this channel. And so I just drew this parallel channel based on these 3 pivot points, the high from August 19th and the high that we recently hit on November 7th, as well as the low from August 5th. Been trading in this channel. If it tests the bottom, with scares about, RFK, concerns about vaccinations, whatnot, maybe this is going to go lower, but really, it depends on what it is. Some are, really great, life-saving. Others are like elective. And I feel like, Moderna might be in that elective pool. So pull back, but still, if there are people who don't elect to get this, if they decide to not be getting, annual shots or whatever, there's still going to be people that want to get them annually. So I think that it's kind of like a buy the fear, sell the bounce. And so I think that price could be going lower. So I've got an alert set for $32 and $30. And if it comes down to there, I'd consider maybe picking up a call. I don't want to be trading shares because I just enjoy doing the options. It's fun. And so I've started tracking it here. Just got the past 5 days worth of data. To buy a contract, we're ranging from, a low of $260 per contract at $2.60 times 100 shares, or the high of $342. And so I could see this coming down to more like my price range, like sub 200, maybe sub $1. And I think that would be when price is getting down to around 32. So I'm just going to wait for that, but I'm just going to kind of follow it here because, to be logging the data that Unusual Whales has, because I'm not currently a subscriber, which I do plan to be a subscriber of. And I'm actually going to adjust my music. It's a song that I don't like, and I'm going to switch to music that I do like. Okay, so with this, I've basically gone over, a lot of it. There's not much data for me to go over, but over here we can see that this spike, the volume did go up, and with that volume, we see following it that the open interest went up. So that's good. You want to be seeing that. And the total premium on that spike was 160,000. Let's see, 159.164 thousand. So $159,164. And we see, the open interest go up. So I think that looks good, but I just don't think that the bottom's in just yet. So I want to be waiting for that, kind of like similar to Celsius, but this is one that I don't think the bottom is in just yet. So yeah, I'm intrigued to follow this. I hope you guys are intrigued for me to follow it. So I look forward to keeping you posted on it. But then the next one, this is one I'm really excited about, is NIO. Some stuff happened that, I think just really adds to the bullish sentiment. And I think I got to put out a video on NIO, which will probably just be a clip from prior analysis talking about a level that we hit that I think that the bottom's in. And also, I did just post something that, let's see, what did I think maybe somebody liked what I posted. Oh, somebody followed me. Nope. So I will go to my profile, and I just posted, that's on the volatility index. Yeah, I just posted this, which, Mr. Chart Norris was posting about Alibaba daily candle chart. This is the exact chart you should trade. And so it looks like it's at the bottom, testing this prior resistance. That's now going to be support, bouncing at the bottom of this channel. And so I think that Chinese stocks could be bouncing. And Alibaba technical level bounce. And so it makes me think that NIO bottom could be in right around $4.50, which is the 786 Fibonacci that I talked about, I believe, weeks ago in a video. So I'll include a clip to that in the next video. And we closed the week at $7.49. It's making me think that Chinese stocks could be getting ready to rumble. And maybe I should have done a boxing glove with that, considering the fight last night. But looking at the chart, let's look over that. Yeah, we got this 786 going from the low of 363 here from August 8th, going up to the high of 771 hit on September 30th. 786, I had talked about potentially these levels holding as support around $5, broke below them. And now we're testing 450. That also corresponds with, this prior consolidation over here as well as over here. So that could be the floor. And we do have earnings coming up. And so while it makes me a little bit antsy, in all honesty, makes me a little bit antsy. But I think that with this retracement, we could be seeing stuff going higher. I think there's a lot of scares regarding tariffs, stuff like that. But I think that the EV credits that U.S. companies, I believe, would be getting, if those going away, that could be beneficial to NIO. So, yeah, I think that there is a lot of potential for this to go to the upside. As I have talked about, think that $8 is a good strike. And so for this, it is the $8 NIO strike, call expiring June 20th. I've been accumulating this. My thesis is unchanged that I could swing these for 100%. I have a number of calls. You can see the ones that I bought here. This is kind of funny. The way that I do the math, I kind of screwed it up. So I got two contracts there, not at $1.26. One at 65, one at 60. Just ends up being the total there. And the last buy I had was on Friday, was at 40 cents. I do have a buy placed for 35 cents, it looks like. And yeah, I just want to keep adding to this. And just looking at the data up here, we see this big spike in volume that was on October 16th, it looks like. That corresponded with a premium traded of $250,000. So not messing around there. The open interest has held. And then actually with the spike over here, the past couple spikes, these though are, less than 100,000. This spike, if I can get it to pop up there, what is that value? On the 12th, that was 63,000. So, it's like 60 gens YOLOing, so nothing too crazy again. But That's not nothing. And we see that the open interest following that has just gone up. So people are not selling. That's people buying. And so I think that's good. And yeah, I mean, I'm still bullish on this. And I think people are probably going to like be trashing me in comments from my videos. Bottoms in, not in. You're an idiot. Everybody's down 100%. That's stupid. Oh, yeah, and I could have actually just looked at the total premium here of, around 50, 60, 50,000. But yeah, I mean, like when people start doing that, that is like a bottom indicator. People are getting antsy. You're wrong. And it's like, no, you want to be buying the dips, not trashing people, trolling people. So yeah, I mean, I still feel good about this, considering that the expiration is June 20th. If the expiration was January, I'd be feeling antsy. But I'm feeling good about this, feeling good about adding. I do have shares of NEO, but, I kind of want to lay off and I just want to trade contracts because I want to be in these trades like on a weekly basis, documenting them here. So, yeah, man, I just feel good about this. And, yeah, price is right around 450, and I talked about that level. So I'm just excited about NEO. I'm excited to add. I'm excited for this to happen because I think it's going to. And 100% from 65, that will be getting to 130. That's on the chart here. That's up to here. So, I mean, I think that I could be making more than 100%, but maybe I will. Maybe we'll adjust some to 200%. I don't know. But it's a Chinese stock, so it's a little risky in that sense. But yeah, I'm getting tired. I'm more than halfway through. But yeah, an hour and 40 minutes. The next one on the list is Plug Power. This is a $3 call expiring June 20th, 2025. This is one I'm feeling a little antsy about, but still do have a buy placed at 25 cents. I have accumulated, it looks like, 5 contracts. My average is 38 cents. The thesis has kind of failed a little bit. We'll go over that in the chart in a minute. But what we see here is spikes in volume are followed with increases in open interest. That suggests that those who are, trading this are buying. A lot of people are buying, holding. And with that, that is driving, the open interest to go up because people are holding. And these spikes, though, in the premium, they are less than 10,000. So these are just, these are fractional YOLOs as far as Wall Street Bets is concerned. So nothing too crazy. This is, manatees chewing on this, not minke or blue whales. We can see that price in the green has been coming down. My position has been coming down with that. I've been averaging down. Did see a spike here, in both the premium as well as the underlying stock. I should have trimmed there. I didn't. As you can see, no trimming. But yeah, let's just look over at the chart and see what that has to say. We're trading below this purple downtrend. I thought, man, somebody actually, the reason why I haven't been making as many videos is somebody commented referring to an older video, I think like about this going to like $18 a share or something. And I don't know when I put that video out, but I mean, at this point with it being around $2 a share, I mean, it's like a 9x or 10x. Yeah, 10x. You gotta be doing this within reason. And so right now, I mean, I'm talking about it going up to $3 a share. Things change over time. And if you don't evolve with the charts, with the market, you're either going to be just holding something that's bleeding forever or just like holding it for a really long time before it gets up to these levels. And yeah, I mean, so my stance with this is that I think $3 is pretty reasonable. I think that going beyond $3, like up to $6, I think that's feasible. I think it's reasonable. But it could be just bleeding lower. But we have put in, higher lows here. We have broken below this. So maybe I want to add another trend line there. But, it's like we're just creating a fan. And, yeah, I mean, we are at 186. That was the level that was hit during this earnings call back on August 8th. And I feel like, like in all honesty, I started dollar cost averaging into plug around here, I think. And something that really put me off to plug was I was talking about buying one share at a time around $3 a share. And somebody was like, no, you got to be upping that to hundreds of shares. And it's like, no, I'm not telling you guys what to do. You don't tell me what to do. I trade my thesis. I trade my comfort. You do you. You trade what you're comfortable with. And it was a bad idea to be going heavy around $3. And I wasn't doing that. So my average is, I could have sold at profit here. My average, I think, is around 125 or something. I didn't because I feel pretty good about this, but because I am holding contracts, why do I need to be holding the shares? If I am bullish, I don't want to just be holding this forever. I want to be taking profits. And so for me, my thesis is kind of like, the person that sent me, it was a comment, it's just like, there have been so many videos since it was, maybe I had mentioned $18. I mean, the scenario's changed. You got to evolve with it. And yeah, I mean, if you want me to be continuing to make videos on plug, don't make me feel bad about the videos that I make. I'm going to be trading what I want to trade, and I'm going to be making videos about stuff that excites me. And the things that excite me are not, taken off like this because there could be, a pullback. And I made that video over here because I was excited, but I just feel like, why did we not hold that? I mean, we blew off top here. I guess we didn't blow off the top, but we got this big, massive candle. I think it's like 20% up. We didn't close above that high. And so we need to see a close above this purple downtrend and then see a secondary close above the breakout level. And I guess we did see that here. Yeah, so I mean, I'm still not bearish. I haven't flipped bearish on it, but it makes me want to trim or get out of my shares at break even. But I'm just going to be selling covered calls, I think, with strikes of $2.50 to $3. That's going to be my strategy. Take the emotion out of it. But anyways, over here, I like a buy at 25 cents because I think that this is still going to $3 by June 20th, but it might be going lower before then. And so, I am risking, I think I said 5 contracts. I am risking, this times 500. I'm risking less than $200. That's my risk with this. And then I also have shares, so also risking that. But yeah, I need to be moving on. The next one I'm really excited about, although I feel like, I wish I could pause the recording, but I can't. I need to eat some food. But anyways, the next one is Rivian, ticker symbol RIVN. This is the $15 call expiring June 20th. I could have taken some profits at 80%. Mr. Chart Norris did have this analysis here, which is actually very similar to the analysis that he has on Alibaba. And, in this, which I'll click on that so we can look over at it. This one, if we expand that, we can see that there's this level here at 12.92. And that would have been a great take profits level. If I do go to his page and search for Rivian, we can see that, Rivian bigger picture still. But then also, see this, I've already liked it. Rivian, zoom in and see the target. Is it 12.92 target hit? We good? So we good. I didn't take profits though because I was at work. I wasn't looking at the chart. I'll go over something from my own analysis that does support this, we being good, but I just didn't act on it. And so here, you know, I just want to add this link here, make sure that I'm matching the destination format, getting that hyperlink there. And then I am just going to, let's go back to this post, going to take a screenshot of this. And this also has this person's comment, which I should like that as well. And just copying this to the clipboard to paste into the, crap. I guess Volatility also happened to have a post on there. Wow, I've got a lot of stuff on here. Maybe I need to clean this up. So I'll copy this, move this, dang it, down to here, and I'll move Volatility's post up. I need to clean this up, I think. I'm just going to delete. Yeah, no, that's relevant, I think. Just got more people saying the same thing. That's a good sign. This is my analysis. And then I've got this post that I just added. I know a lot of this is behind me, so it's probably not that interesting, but, you know, housekeeping is important. Although I don't know how important all these screenshots are because I usually just go to the charts. But yeah, I mean, so coming back to over here, he said, you know, we are good, even though I did not sell. And so the reason why I didn't sell is because I had a limit order placed at, 100%. I've now adjusted that to 80% because, you know, I got to take ownership of my mistakes. But, you know, with that being said, I had a limit sell placed. I need to note this in my notepad. So Rivian is 80%. I have 2 contracts. Actually, no, I have 3. And so I do 2 at 80 and then 1 at 100%. I previously had a limit sell at 100% and a limit sell at 200%. I think I was getting greedy there. And so I was at work just like on a quick break, and I saw that, let's see, I'll go over to the data here. That was on this day when it hit this high of 216. My limit sell with my average at the time at 115. My limit sell was at 230. I was like, just chill out, let the order fill. 230, almost there. When it was at 216 or around, above 2, I should have looked at the chart because I would have noticed that, it was wicking into its technical level, 13, hit a high of 1310, got rejected, and then it pulled back pretty massively. On the 14th, came down over 14%. This does look like that would be a dragonfly doji, big wick to the downside, open and close right around the same price. The close was at 10.06. The open was at 10.07. Very close to the same, big wick to the downside, buyer stepping in, respecting that level of 10.05, which was a prior low over here and also just being right around $10 a share. I think that we're probably going to bounce. I think that this is going higher, so I feel good about that. And I just think that this is kind of, getting ahead of ourselves, and then kind of like the fear of, the subsidies for EV companies, that might be going away. It's likely going away with the new administration. But, I feel like Rivian already has a pretty good start, so I feel like they're going to be less impacted by that than maybe some of the smaller EV companies. So I don't think it's as big of a deal for them. I think it's definitely much less of a deal for Tesla. And so I think that this is kind of like a buy the dip. And so I previously had a buy placed at 90 cents. I then adjusted that to be, I believe, around 105. But then seeing this and my order not getting filled, 80% would have been filled. That would have been at, let's see, what's 80%? I'm just going to pull up a calculator. I closed the calculator, so I got to reopen it. Okay, so if I have 115, so $115, let's say, and that times 180, 207. That would have been filled easily. So I should have just done 80%, not been greedy, and then done 100%. Now I'm holding 3 contracts, so I can do 80% 2 contracts, 100% 1 contract. I'm still making some money, making hundreds of dollars with that. So feeling good about it. And yeah, and then going over the data here, what we can see is the volume. This is something I've got to show you in Unusual Whales. It's gotten me really excited. I'm pretty sure it's a buy. The axis has had to change. Over here, volume. Let's say I delete the volume here. The axis changes. Over here, volume 2,500. Put that number back up. It's gone up. Massive amount of volume. This is a blue whale. And so, with that being a blue whale, we can see that the premium, I mean, for me, it's a blue whale. Maybe it's a minke whale because it's just a million. But that is over $1 million. That is $1,118,000, $18,566 premium traded on that day. I think it's going to be a big buy because, we see, let's see, the open interest going up here, goes up and pulls back. Those people, trimmed, when it was up. The low was up. And then the low's lower, and then they're buying back in. And so I think that what we're going to see is this open interest spiking up, that's going to go higher. I'll see that data on Monday. And yeah, I just think this looks really good. If we do look over at Unusual Whales, let's see, do I have Rivian up here? No, I got to add it. This is Rivian. And I can actually do this. And that is $15 strike, expiring June 20th. So $15 strike, expiring June 20th. If it's not in here, I'm screwed. Yep, I'm screwed. So I'm not going to have that data anymore. So maybe this is, I got to wait for a sale. Dang it. Yeah, I'm sorry I failed you guys. It was stored over here, but I'm not. Oh, it is. Ha. Whew. Whew. Okay. So what we see is, the thing that makes me think that this is a buy, that this is a massive buy over $1 million, is that it wasn't reactionary. It wasn't, this dips down to, let's see, 92 cents, and then a stop loss gets filled. Premium over here was not higher than the low, 95 cents for this candle. 10,000 contracts traded. It looks like for that candle, less than $1 million. That's basically $1 million. And that's a lot of money. So I think that that's going long. I think that it's a dip buy, and I think that this is looking bullish as ever. And so maybe I actually just want to do 180%, do 100%, and this is me getting greedy and not learning my lesson, one at 200%. So I'm just noting that in my little notepad. But yeah, I'm stoked about Rivian. I hope you guys are too. But I need to move on to the next one, which is one that I am no longer going to be covering. It's kind of because the thesis has played out. This is ticker symbol SSYS. No idea what the company is. Don't care. $10 strike expiring June 20th. I just like to be safe with them. And so my thesis was based on a video that Gareth Soloway put out. And if I do flip over to the chart, we can see that it kind of broke above this downtrend, but that was kind of just like hanging below it. I didn't know, what it would be doing with earnings coming up. It could just be going back down to the downtrend. I don't have any conviction in this company. I do not care. So I took profits at 60 cents. And I could have made a lot more money. I made less than 10% on it, less than $10. So kind of disappointing there, but I just need to have the conviction in the plays, and I just didn't want to be holding this. What I should have done is sold 2 of them. I sold 3. and then just held to C. But it's like that thesis of only wanting to hold 20 contracts. I got to trim. And so this went, my average was 57 cents. I could have, more than 2x. I could have 3x this easily. I didn't do that. And so that's kind of disappointing. But I made money. Nobody ever lost money taking profits. And, this was good. I wanted to track it, and the thesis did play out with this hitting the level at $10. So that was a beautiful, beautiful analysis. So, thanks to Gareth Soloway and Verified Investing for putting that on the table. If any of you partook in this, congrats. I think now is the time to get out, though, because it did hit that level. It got rejected. There's a gap here down to around $8.40. Yeah, and I don't really have too much to add to this. What we see is just not much data here, all these NAs. And so it's like I'm following this here. I'm getting in the position here. There's all these NAs and still NAs after I sell. It's like I just feel a little uneasy. And so, yeah, I could have made like $300. I could have made $300 with this but instead I made 10, so not the worst. Okay, so the next one that I'm going to go over is Tilray, ticker symbol TLRY. I'm really excited about this one. This is the $2 call expiring June 20th. I like to have those longer dated calls. I do have two here. Bought one at 20 cents, bought another at 19 cents. Do have a buy for 17 cents, which was the low on November 14th. It is trading a little bit lower than I kind of anticipated, but I'll just go over the data and think about, do I think that the bottom is in? I do think the bottom's near. A lot of people are saying this is bleeding, this is dying. I think those are bottom signals. And I think that, people were too aggressive with this higher up. But let's go over some of the data first before getting into the chart. Well, we can see this is my position here, which, of course, could be going to zero, as well as the stock. So zero over there. And so what we see is price in green, as well as the premium has been coming down. I could have taken some profits here, but I didn't. I've just been holding. And yeah, I could have made 20% there. So that's kind of like this thesis of 20%. You could sell, trim at 20%, and then buy back at or below your average. But then eventually it's going to get moving beyond your limit. So I don't have any limit sells placed, just because I kind of want to see what happens with this. And we can see that volume has been spiking, and with those spikes, open interest has been going up. So that's looking good. But if we do look at the premium with those spikes, it's $12,000, So it's, one degen, 1 1/5 degen YOLOing on it. So it's not a big deal, but it's also $2, less than $2 stock. So, I wouldn't really expect whales to be participating in this. And so if we do look over at the chart for Tilray, just based on my thesis that because I'm an idiot, that price would be coming down to $1.42. And so for me, that's kind of like the level I want to be buying at. And so I've gotten 2 contracts, have no shares. I do plan to add more at 17 cents, just one more contract. But this to me, it looks like, this looks pretty bearish because we did close below that downtrend and we did close below that low. Closing the week at 135. But I think we could be seeing a bounce. And maybe we see a bounce that takes us to, let's see, from today's close or Friday's close up to the top of that wedge, 10%. Maybe it bumps into that as resistance because it does seem to be pretty weak. But, it could go from there, 10% move. Maybe it gets up to here. That's 25% move. But I feel like this is more likely. And so, yeah, with this looking more bearish, maybe I want to, because I have 2 contracts, maybe I do want to place 20%. Oops, 20%. Wrong number key. And then another one at 100%. And so I'm going to note that in my notepad. So Tilray 20% and 100%. All right. But yeah, I mean, I think that the bottom is more likely in. I know there are a lot of people buying up here, but I had talked about, right before this happened that I thought it was coming down to here and I just waited for it. I think it's good to be patient. I think this is a good example of being patient. And that's also why I think it's good to have long dated contracts. So, I feel good about that. And speaking of long dated contracts, the next one is Unity Software, ticker symbol U. This is the $45 call expiring January 17th. This is one I had previously made some money on, but since I've been tracking it here, I did basically at break even, but I lost a little bit of money on it. This one is one I'm not going to be covering anymore because, when I took profits, I had 11 contracts, I had 9 contracts sold at 11 cents, which was my average here. And then just, whatever fees and stuff. So I lost 60 cents on that. Not a big deal. Do not care at all. And the high that day was 12 cents. If I had it placed at 12 cents to make a little bit of profit, maybe it wouldn't have been filled. The following day, 13 cents, 12 probably would have been filled, but 13 may not have been filled. So, I could have made a little bit of profit, but it's negligible because following that, the highs have just been bleeding down to 2 cents. I think this one's going to 0. So I'm not going to cover it anymore. And yeah, I think that this open interest that's up here, I think those people are probably going to be losing some money. I do have, the thesis that this could be going up to 45 because that is up here, but I think it may take some time. And, I've got all these retracements. I just need to, actually, that's not the retracement I want to look at. I want to look at one that goes from the bottom here up to the top. And so I'm just going to delete all of these. So it cleans that up a little bit. And yeah, I think that we have bumped into a technical level. This, I've talked about. So I think that this could be a dip buying level. For that contract, though, I think that one's too risky. I'm not going to be buying it. But the other contract that I am holding, I think this gives me some confidence that I should be getting my average down. And so I also wanted to, from this move, from the low here, clearly that was a low. The 52-week low was 1390, so there. And then following that, we got this move up. So I wanted to do a Fibonacci retracement from that low at 1390, going up to the high here of 2340. Just going to make sure those numbers are correct. Yeah. Okay, so I think that this could be going lower. Maybe I want to add the 618 there and the golden pocket. We're right there. So yeah, I think this could be going lower. So I think it's good to buckle in for some further downside. But, I think that there's hope that this could be the bottom. It may not be doing this retracement out of the 786, which would be coming down to around $16 a share. I think because of all of this consolidation here, this inverse head and shoulders, and this being the golden pocket here, we did, test effectively the 65% retracement at 1723, hitting a low on Friday of 1729. The 618 is at 1753. We do have this purple downtrend here, the neckline of that inverse head and shoulders. So I think that the bottom could be in or near. So, I want to see how this performs, but I could see this getting up to, $30 a share, right around there, maybe by February. And so that's the other contract that I have. This one, I think this was going to be a loser, so I'm not going to cover it anymore. $45 call expiring January 17th. The one that I've been accumulating, which I think might be a bad idea, is the $30 call expiring February 21st. So I've got 3 months until that expires, 3 months. And, so I've been accumulating more aggressively last week since I did get one contract at 80. And then I've been, adding around 40. I feel kind of stupid doing that because my position is now at 48 cents, the average. But with the low on Friday of 20 cents and potentially respecting that golden pocket, maybe the bottom is in or near, but I'm not going to buy tons of contracts at this price just to get my average down. I'll buy one at 20 and reevaluate. Kind of like how I bought one here at 44, reevaluated, one here at 37, reevaluated. I probably should have done this at 35. And then this, or, I should have done, this, because this one was so high, I should have, getting that average down. This I should have waited for 35. This one, I think, fine to wait for 30. I think it's good to take a break. Maybe 25, though. Maybe 25 is one that I want to add. I'm going to reevaluate. Well, no, I will. Don't want to. Maybe I don't have an order placed, but maybe I want to place one. I'm going to make it yellow, so I know I've got to consider that. Maybe I want to place one at 25. And for this, I have a 20% here. If these are getting filled and it starts to bleed lower, I'm going to want to adjust this to 0%, just break even. But for the time being, 20%. And what we can see with this in the volume here, of course, this has been bleeding over here, is that with the spikes in the volume, open interest has been going up. So that's encouraging. But with this, we can see that the volume over here has corresponded with 45,000, this being around 30 to 40,000. So again, it's not, if you get 10 degens in a room, that's 100,000. That's more than just a YOLO. That's something going on there. So it's not too notable to me yet with this data, but I think that this could be, looking at the chart, finding some support here. And so, yeah, I think that I need to do that. And I'm going to put it in my notepad. I don't know if I can place it right now. I don't know how much I have on the side. Let's see. I am just going to check. I do orders on my phone. What do I have on the side? I have a little bit less than 25 on the side. So I need to kind of figure out 25 for Unity, but I do still want to have that 20-cent order as well. Need to be getting that average down, especially if we're getting into technical support. So yeah, there's that. And then the last one, I'm not going to be covering this one again. I might be covering a different contract, and the reason why I don't want to be covering this one is because it expires in December on the 20th. That's the monthly contract expiration. This is the UVIX. Just put a video out on UVIX. I'll pull up the video that I did. That is this one right here. I recommend checking it out. It's about a 30-minute long video. Get into kind of my thought process and what I'm doing. And yeah, I think it's really valuable. But anyways, the strike for this, $8, given the pretty massive drop that we've seen recently in the stock price, that's in green here, that the high over here was below 650. I don't know that it's going to get to 8 by December 20th. Maybe we do get a big move, but with the analysis that I had just done in the video, I feel like we could be bumping into some resistance around 469. And so I'd rather be looking at contracts that are dated further out into the future because I think it just gives a little bit more data. And actually, maybe I want to do VIX, not the UVIX, because I think that is one that is, to provide insights into, what's going on with volatility in the markets. Because with this one, we saw a pretty big dump on the 14th, 162 contracts traded down. So from, 316 that were open on the 13th to the 14th, only 154. But it looks like, let's see here. I don't have the data here in unusual whales, so another reason why I'd like to look at a different contract, whether it's UVIX or the VIX. Now we see here that from this, the high was 14, and so there was a bunch of selling, and then it came down to 11 cents, and then there was a bunch of buying, and then it pumped to 23 cents. And so that kind of made me feel like, well, I also bought on that dip. I had also bought back here at 19 cents. But, I do have shares of UVIX, just made a video about it. And part of the reason why I trade the UVIX is because I don't want to get into the options with VIX. That's why I like the UVIX. So why am I even looking at options with this? And so, well, I should probably take some profits at 20%. I think that's reasonable. Not break even, take some profits. And so I had one contract at 19, but another at 14 on the dip. Not sure exactly what the low was, but the average that day was 11. Happy about that. Got my average down to 17 cents. And then I sold at 20 cents. So 40 cents there. Got 40 bucks back. And yeah, I'm happy about that. The average, it looks like, for Friday was 23 cents. I could have, made more. But I am not holding this with about a month until expiration. But I'm holding my shares, and I think that I can make 10%, if not 20% with those. So I feel good about that. But anyways, that's the last one over here. And so I'm just going to pull back to my theses to close the video. And, thank you so much for watching. Hopefully this 2-hour and 15-minute video is useful for me. It's definitely useful for me in getting my plans, my strategy organized. I do think that, I might have a loser on here. So, I'm going to have to maybe take some losses with that. But otherwise, I think the other ones are good for me to get my averages down. But yeah, I'm going to kind of have to assess this with that Unity software call there, just because I think it's a little bit too close for comfort for me. But yeah, I will clean this up for next week, remove the ones I say I'm going to remove. I'll probably add more. Yeah, I hope that this was helpful for you guys. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more weekly videos on options contracts like this. Thank you so much for watching. Enjoy the rest of your weekend, and I hope you have a great week trading starting on Monday, the 18th. Take care, you guys.